Baba's earnings this morning were a big disappointment. We saw net income go down. We saw free cash flow decrease. We saw revenue growth expectations tampered for the rest of fiscal year 2022 or the next 2 quarters go down to 20 to 23% versus what was estimated at least around 30%. And with that being said, I made a decision this morning, pre-market, to sell my entire BABA position. So in this video, I'm going to look at Q3 results. We're going to go a little bit more into detail into all the negatives and any positives I can find. And then next, I'm going to talk about my decision to sell my BABA position. All right, jumping into earnings for Q2 of 2022 fiscal year. Alibaba reported $1.74. Analysts had them at $1.83, or they missed by 9 cents, or about 5% there. Not terrible. On the revenue side, we're looking at 31.14 billion reported. Revenue estimates had them coming in at 32.07, so they missed by about $1 billion, or to be exact, 923 million, or about 3% on revenue. All right, jumping into the press release now. Revenue came in at 31.147 million, increase of 29%. Interesting thing here, consolidation of SunArt. So they purchased and took a controlling interest in SunArt. If you exclude that revenue that was now attributable to Alibaba, it would have only been a 16% year-over-year growth, so 28 million. All right, looking at annual active consumers, they raised by about 5% from the last quarter. They have 1.2 billion annual active consumers, about a 5% increase of 62 million, and 41 million came from China, 20 million from overseas consumers. All right, moving from income from operations, they reported that at $2.3 billion. Adjusted EBITDA came in at 27% decrease to 5.4 billion, and the adjusted EBITDA non-GAAP at 4.351 billion. And they're saying that the decrease in year over year was due to investment in key strategic areas. We'll look a little bit more into that. All right, next up, let's talk about guidance. So guidance was reduced to 20 to 23% year over year growth for full fiscal year 2022. Now, this is a pretty significant drop. So let's look at what analysts had them in. And so if we look at, let me zoom out for you for a second. 2022 full year guidance was at 142 billion. That's at 48, the average of 48 analysts. Low side being at 137, high side being at 152. If we move that over to like last year's, they had $109 billion in revenue. So if we do the math on that, that's about a 30%, analysts were anticipating about a 30% increase in growth year over year for Alibaba. So this guidance, significantly lower, in my opinion, definitely affects DCF models. So you have to take that into account if you are doing DCF. Now jumping into cloud computing, there's some bad and good here. 33% year over year growth in the cloud computing space, and I believe year to date they're still up about 30% year over year. Now last year at this time they were up 60%. We'll talk a little bit more about it. So in terms of growth in the cloud computing space, I believe this is significantly lower than what folks have anticipated, and this is a higher margin business for other companies like Amazon, so just keep that in mind. On the product side, it was recently announced that they will be doing some in-house development of server and other chips, and so that's here. So this is something where the chip industry is extremely good right now. Companies are being valued extremely well. So it will probably take some time for this to occur, but it is definitely a, it could be a good thing moving forward for them, but this is not going to help them in the immediate term. All right, during the previous quarter, Alibaba did buy $5.1 billion worth of shares over the last quarter. Now remember, Alibaba's market cap is around 400 billion currently, and so this is a little bit, probably about a 1% decrease in shares outstanding roughly. All right, jumping into the pretty presentation. So total revenue growth was 29% year over year. China commerce was up 30%. If you exclude the SunArt acquisition, if you will, consolidation was up 16 and 14% year over year. So that that consideration exclusion, help people understand where the growth is actually coming from. On the international commerce side, 34% year over year, cloud computing 33% year over year. So going into this a little bit more deeply, that China commerce and retail is 63% of their business with that 33% growth we just talked about. So next up, if we go into cost trends over the last quarter, you can see, looking at year over year, you can see costs have definitely gone up in a nominal fashion, but even as a percentage, cost of revenue has gone from 54% to 63%. Product development expense has stayed flat in terms of a percentage and increased on the nominal level. If we look at sales and marketing expenses, is increased from 9% to 13%, and general administration expenses has stayed flat, which is good to see that. So in the press release, investments were stated a reason why we saw a decrease in EBITDA and cash from operations. So if we look at the increase in spending between 2020 and 2021, you can see that they spent 6.3 billion RMB on key strategic investments for 2020 and 18.971 billion RMB for this last quarter. So you can see that increased about 3 times. And then what those key strategic investments was new retail community community marketplaces, new retail others, local consumer services, Taobao deals, international Lazada, and logistics Kaino. Now, I don't know what those investments actually do. I assume they're for future cash flows in the future, but I would like a better explanation than what was actually either in the press release or in the slide presentations. Looking at commerce growth, if we go down to the little chart, we can see that from 2020 to 2021, they had 171 billion RMB, up 31% year over year from the previous quarter, and they're up 33% year over year from the 12 months ending September 30th. Moving on into cloud computing, revenue was up to 20 billion RMB or $3 billion US, a 33% increase as we stated earlier. They had a small profit of 61 million US dollars compared to a 567 million RMB loss, which is not a huge loss, to be honest. Let's see. Our new, again, as we talked about those chips, these will be deployed in-house in their data centers, and as well as they rolled out this open source operating system, and they plan to invest more into it in the future. Looking at the revenue for cloud computing, the 3 months, like I said, 33% up year over year, 20 billion RMB in revenue, 36 billion RMB for the 6 months ending September 30th, 31% year over year growth there. Now we look at adjusted EBITDA for this section. You can see that it's went from 567 million RMB to 396 RMB. And then the 6 months ended, you got 1.6 billion RMB loss to a 736. Starting to actually make money in this segment, and that's a very positive note. This is a high margin area for places like Amazon, so I anticipate a very similar high margin once they start to realize those economies of scales, and that's what they were basically attributing to finally getting a positive adjusted EBITDA here. Segment reporting now, digital media and entertainment. This is a small portion of their business. Brought in $1.24 billion in revenue compared to 8 RMB in the same quarter. So just slightly up. Yep. Okay. So let's look at that. Basically flat year over year. And if we look at the year over year for the last 6 months, it's up 7%. Bringing in larger losses overall. So 710 RMB loss versus 900 RMB loss. The 6 months loss is lower than it was this time last year, which I guess is good, but but still overall not making a profit in this segment. Wow, really bad earnings for Alibaba this quarter. We saw earnings per share miss, we saw revenue miss, we saw free cash flow and net income, huge decrease there. We saw a guidance of revenues for the fiscal year 2022 be reduced to 20 to 23% year over year growth. Analysts on average have them about 30%. And so if you adjust your DCF models to account for that, hopefully you were at 20. But if you had anything above that, make sure you adjust it down. And even if you had your DCFs and you tapered off after a few years of decreased growth, I still believe this new guidance estimate is going to have you need to make some updates to your DCF model. So I'd highly suggest going in there, doing the calculations for yourself, figuring out what Alibaba is worth to you today. I know these numbers today look really, really bad, and well, they are bad. And the reason why I made a decision very quickly to sell my position in Baba was these values are a lot. I mean, honestly, revenue today is much more important than revenue in the future. And if decreased growth is going to be what it is in the future, and the assumption here is revenue growth isn't going to somehow magically get higher than it was in the previous quarter. Alibaba is a very large company with revenues going to be $130 billion US dollars for fiscal year 2022 with the guidance that they said. And these large companies, growth is harder and harder to achieve more year over year, right? So if they're saying 20% this year, 20 or 23% this year, what is it going to look like the year after? What is it going to look like the year after that? I assume if they can just remain at constant at 20, your DCFs are going to look much better, right? But let's say that goes from 20 to 18 to 17 to whatever, right? It starts to look worse and worse. So go in there, update your own models, make your own calculations, get your own decisions. But with what I have, I made the decision to go ahead and sell. I had some gains that I wanted to go ahead and offset by the losses I have in Baba. My plan is to wait the 30 plus 1 days to avoid a wash sale. And with that, depending on how things are moving, where Alibaba's stock price is, momentum, I may reevaluate and re-enter the Baba position, as I stated on my community post this morning. I will be watching Alibaba in the future. I've really, really liked them. They're have been one of my favorite picks. It's unfortunate miss and very unfortunate quarter for them. And the guidance is really, really bad. And so with those things, I had to make a quick decision. And so I went ahead and sold my entire position pre-market.